Prepare to delve into Tesla's financial universe and this research. Prepare yourself to learn all the important behind-the-scenes information on how Tesla will perform in the upcoming weeks and months. For starters, the company generated over $4 billion in net income and nearly $25 billion in revenue. But the net margin on automobiles decreased as a result of a sharp decline in prices. In a bull market, the company's stock price may rise to a high P/E ratio of 60, with a price range of $240 to $250 per share. In a bear market, however, the stock price may drop to $163 per share. Our analyst projects a P/E ratio between 50 and 60 for the company Got the Future and predicts that revenue in Q4 will nearly approach $30 billion. Prepare to learn about Tesla's growth prospects and financial performance with this insightful video analysis. However, before we go any further, make sure you have a Wall Street Games subscription. Don't forget to hit the like and notification buttons. Bell as well. Tesla announced first quarter sales of about $25 billion and net income over $4 billion, primarily from automotive earnings. However, the net margin for automobiles fell to 14.5% as a result of a notable decline in prices, from 20 to 10%. The EPS was $1.30, but considering the record-breaking quarter in Shanghai, this number is probably going to be impacted by FX currency charges. It's anticipated that Tesla would suffer about $350 million in currency expenses, which could lower the EPS to $1.19. The number of outstanding Tesla shares will be reduced by 1% each quarter, and there won't be any buybacks in 2023. As for the stock, it is now trading at over $180 per share, with a market value of nearly $700 billion and a P/E ratio of 55. If the market turns bullish between April 21 and July 20, the stock could potentially reach a high P/E ratio of 60, which would translate into a stock price between $240 and $250 per share. If it goes even higher, to a P/E of 65 or 70, the stock price could reach $300 per share. However, if things go south with a higher interest rate and negative sentiment, the P/E could drop to 40, translating into a stock price as low as $163 per share. A more realistic scenario would be a P/E of 45 to 50 for the stock. In the near term, Q2 is anticipated to see Tesla deliver over 450,000 vehicles, which may lead to a total revenue of $25.5 billion and a net income of more than $4.3 billion, again with the influence of foreign exchange charges. We have no doubt that Tesla's financial performance will continue to grow. According to their predictions, the company's net income will surpass $27 billion in the first quarter, with about $250 million coming from Tesla Energy alone. The bulls anticipate a large drop in costs, translating into a PS of 1.29 cents per share and an EPS of 4.80 overall. Bulls also think that Tesla's stock price will rise, possibly reaching a P/E of 70 in the future. However, for Q2, they recommend a safer P/E of 50 and a fair stock price of $228 per share. The bulls also think that Tesla will continue to grow significantly, delivering 475,000 vehicles in Q3. They believe that Tesla's earnings will justify a higher P/E, perhaps even up to 70, and that the stock price will reflect the company's strong financial performance. Finally, the bulls point out that interest rates are high and do not think the FED will raise them much higher. As a result, they do not think the Tesla stock price will drop much. But given the company's dismal performance, I don't think it could go above 60 pesos in Q3. The highest it could go is 65 pesos, or $312. But I doubt it will go much higher than that. In my view, a P/E between 50 and 60 would make sense given the time period is from. I think we should be out of the bear market by the time October 21st to January 20th, which is 9 months away. Once we're out at 60 to 70 pay, it makes sense primarily because of the growth expected for Tesla in the production of Cybertrucks by January 2024. There should be a few thousand of these vehicles on the road, or at least produced to be delivered. This will be a significant indication of Tesla's progress. If you ask me, I suggest keeping the P/E around 55 or even 50 to avoid the bears and bulls. But if something unfortunate happens, like a cyber strike being postponed until the following year, or the plants in Shanghai and Berlin close again, we might see the P/E dropping to 30, 35, or 40. As a result of Amazon's poor performance at 100 P/E, the bulls expect the stock to be around 80, 90, or even 100 PE. This high expectation is due to Amazon's consistently missed earnings, which compresses the PE when they beat earnings. However, since there is a lot of interest in Tesla, I think a constant PE of 50 makes sense. Going into Q4, I predict that 500,000 vehicles will be produced and delivered. This production would result in the revenue almost reaching $30 billion in total, which is insane. I will cut it to about $375 million for FX considerations, so we might still expect over $4.5 billion in net income. This quarter would be like watching a crazy quarter, with a net income of about $5 billion. Estimates for Q4 suggest an EPS of 1.36, and the total EPS for 2023 is expected to be close to $5. Even though 2023 will be a recession year, more than 1.8 million cars will be delivered overall, with a 41 growth year, which is pretty impressive at a 50 pay. The stock price is expected to be about $249 per share. But I predict a bull rally between January 21 and April 20, 2024, and the stock price could reach a 60p trading at about $300 per share. I think there will be a violent bull run by the end of 2023 or early 2024, driven by the FED pivot and much positive news. If Tesla's P/E ratio reaches 61, the stock would hit a $1 trillion valuation at about $304 per share. But the stock price could rise much higher than that if there's no dilution. So let's say they are diluting by the end of 2023 or the beginning of 2024. At that point, I believe there will be a significant bull run. Furthermore, I don't think it will reach that level, which would give the market a value of more than $1.1 trillion. For this reason, I think the greatest price it might reach in Q4 2023, when the profits are announced in 2024, is 60 p. But again, bear sentiment could push it to 40 or even 30. That's 150 per share if it drops below 30, which is excellent news. However, I'm confident that by then a bull market will have emerged, and a 60p wouldn't make sense for Tesla. It looks comparable since I want the price to be at least $260 by the end of the year, and a realistic stock price range for the end of this year in 2023 is between $249 and $299, or $300 per share. Let's observe and see what transpires. Because this is only a prediction and predictions rarely come true, please use caution and diligence. Every quarter of 2023 will almost certainly it is projected that 1.8 million Tesla stock will be delivered. Bull and institutional investor Gary Black has supported a Tesla share repurchase at this specific after a buyback. The company's earnings are distributed among fewer shares, potentially increasing earnings per share EPs and increasing investor interest in the remaining shares. It's crucial to remember, though, that the choice to repurchase shares may have an effect on other aspects of the business's finances, including debt levels and liquidity. The purpose of undervaluing shares is to use excess cash to give shareholders their money back. The overabundance of Tesla shares and acquisitions would be restricted and need financial if audio and Twitter were judged to be in fault. We'll update this in February and March to incorporate Shanghai's February sales data, at which point we'll have a much clearer picture of what's happening as discussed. 430,000 vehicles were delivered in the first quarter, with an EPS of 1.19. Looking ahead, it's expected that Tesla's net income will reach over $27 billion in Q1, with a significant reduction in expenses and profits from Tesla Energy and the delivery of Cybertrucks. While the bulls expect Tesla's stock price to rise and possibly reach a PE of 70 in the future, our analysts predict a PE ratio between 50 and 60 for the short term. In a bullish market, the stock price could potentially reach a high PE of 60, with a range of $240 to $250 per share. In a bearish market, the stock price could fall to $163 per share. We hope you found this video helpful and informative. Once again, thank you for viewing, and see you in the future video.